I have a guaranteed way for you to beat the recession in 2020 by smashing that like button.
This is the end.
Ladies and gentlemen, the sky is falling. At least that's what the mainstream media is wanting us to believe. Today we're going to be taking a look at the headlines that are driving some of the issues that are happening in my portfolio, probably your portfolio as well. Hey guys, if you are new to the channel, my name is Sal B. I am a new dividend growth investor. We started investing back in June of 2019 and we have been tracking our performance. We've been tracking our gains and our dividends as they come in. We're making 2 videos a week right here on Tuesdays and Thursdays. Thursdays we do a check-in on our portfolio, let you know what we're buying, why we're buying it, and some of the strategy behind what we're doing. First, we're going to take a look at some of these headlines, and then we will check in with our portfolio.
And here we go.
Hey guys, we're going to be taking a look at some headlines that have been coming out over the last 24 to 48 hours. And as you can tell, the recession is imminent, or the recession is coming. Or is it? You take a look at some of these headlines and you think the recession is going to be here tomorrow. In the handful of articles that I've been reading over the last few days, the best guess is that we may see a recession, and that's a huge may, in the next 22 to 18 months. So all these headlines have been coming out about the looming recession signal intensifies, we had the inverted yield curve, and apparently Captain America is going to save us. If you're interested in these articles, I'll link them down below. There is an article here on Fox Business from Janet Yellen. She is the former chair of the Federal Reserve, and she told Fox Business that she doesn't believe that the US economy is headed towards a recession. So her answer is that it is a most likely no. I think the US economy has enough strength to avoid that, but the odds have clearly risen and they are higher than I'm frankly comfortable with. If you want to check out this clip, I will leave a link in the description below. All right guys, we're going to open up our portfolio, go through it real quick, and then discuss some of our recent purchases and sell-offs. As I open this up, it's 9 o'clock in the morning on Thursday. The bell has just rung. On the day, we are up $3 or 0.3%, which is kind of surprising, but hey, I'll take it. On the week, we are down $27 or 2%. On the month, again, we're down $6 or 0.6%. Since we started investing back in June of 2019, over the last 3 months, we are up 1% or up $15. Now, we have made some recent sell-offs and we have made some recent purchases, which we'll talk about here in just a few minutes. As I mentioned in our last video, which I'll leave a link in the description below, we sold off a couple shares that we just were not happy with, including Office Depot, US Steel, and GE. With the profits from that, or lack thereof, and the dividends that have come in, we've reinvested into a few new stocks. Recently, we invested in NRZ, we also invested in WPG, and GMLP. Now, before I get some comments down below saying that I'm chasing yield, I will fully acknowledge that this is a high yield portfolio, that we are looking at specific stocks that are returning a high yield on their dividends. Now, my strategy, the best way that I can describe it right now, is looking at the entire portfolio as one position, where the entire portfolio is looking to track and gain momentum to get more dividends, to collect high dividends over the course of the next few months into the next years, which will then be reinvested with the dividends earned in more stable, blue chip, aristocrat stocks. That way my portfolio balances out. So I hope you guys understand why this strategy is the way it is. It's not something that I would recommend for everybody. I don't know what your risk tolerance is, but my portfolio, if you take a look at the stocks that are in there, we do have a very high risk portfolio. We are doing that essentially because we're playing catch up. I'm 36 years old, I invested late in life, and there are articles to suggest that it's not too late. If you jump in right now, you have a lot more for you to gain. The more time spent outside of the market is less opportunity for you to start investing and saving for the future. If you're interested in more of that type of lifestyle, how we distribute our income, I have an income distribution calculator that I put together, very simple, no bells and whistles. I will leave a link in the description below for you to download that. Just save it and make a copy for yourself. All it does is you take your income, you put it into one line, and then it automatically gives you a calculation of what your income would look like. If you're living off of 70% of that income, you're saving and investing 10% of your income as well. Taking a look back at our dividend income portfolio, as I mentioned, our portfolio is a high risk portfolio. We do have a lot of business development companies, a lot of REITs, and a lot of dividend yield that is very high. Now, I know I'm going to get a lot of accusations that I'm chasing the yield, that I'm just looking for high returns very quickly, get rich quick. The fact is, when you go through the True Wealth Formula system, which I'll leave a link in the description, we are treating a lot of these stocks as one position. So not all of the stocks that I have purchased myself are a part of that system, but a number of them are. Most of them are these high yield. So again, just going back to the fact that these should be treated as one position, one portfolio, instead of looking at the individual stock as an individual holding. Now you'll see PSEC on here and NLY. There's a lot of PSEC haters. There's a lot of NLY haters. But the fact is, again, just to stress it again, this is a high yield, high risk portfolio where I believe my strategy for the most part is shaping up to be one that pays regularly via high yield investments that will in turn pay for my ability to purchase safer or more aristocrat stocks, blue chip stocks in the long run. So essentially I want to build up my dividends so that I can quickly turn that around and then invest in safer stocks. Now, I don't know if that strategy is going to work out, but hey, we're going to try it out for a few months, if not a couple years, and we will hopefully see that compound effect happening. Guys, thank you so much for joining us. If you find value in videos like these where we are transparent with our portfolio, what we're buying and why we're buying it, I simply ask that you hit that like button, subscribe for more content, and we'll see you next week.